Hey everyone, welcome back to Corporate Decoder, the place where we try to decipher corporate filings, and occasionally they're so boring we fall asleep doing it. Hopefully this report won't be one of them. Today we're diving into the Advisor Managed Trust's semi-annual report. Think of it as a checkup report, but for investments to see how healthy they are. This report covers everything from how the funds are performing to where your money is parked. So let's get into it. First off, this report gives us a snapshot of how three specific funds under the Advisor Managed Trust are doing: the Diversified Equity Fund, the Core Fixed Income Fund, and the Enhanced Fixed Income Fund. These funds are designed for folks who are clients of a financial advisor using what's called the Advisor Managed Strategy, a method for shifting assets around depending on market conditions. The reporting period is from August of last year to January of this year. Right at the start, each fund has its own little overview section. It basically states that this report holds important info and points you to a website for even more details, or a phone number if you prefer a good old-fashioned call. One of the first things we see for each fund is a breakdown of costs. This section shows you what it would cost to invest $10,000 in each fund for the last 6 months. For instance, if you had that amount in the Diversified Equity Fund, it would have cost you about $27, or very 0.4024%. Lastly, the Enhanced Fixed Income Fund would set you back $22, which is 0.43%. This helps you understand how much of your potential returns are being eaten up by fund expenses. Next up are some key statistics. For the Diversified Equity Fund, the total net assets are about $375.6 million holdings, and the total advisory fees paid were $73,000, and the portfolio turnover rate was 0%. The Core Fixed Income Fund shows total net assets of about $17.7 million. 444.7 haven't idea being traded, and how much it costs to have them managed. Next, we get a peek into where the money is actually invested through asset weightings. In the Diversified Equity Fund, the biggest chunk is in information technology at almost 24%, followed by financials at nearly 14%. For the Core Fixed Income Fund, US Treasury obligations take the lead at 42.6%, with mortgage-backed securities coming in second at 25.6%. Enhanced Fixed Income is mostly in exchange-traded funds at 98.3%. This shows the different strategies of each fund, one focusing on stocks across sectors and the others focusing on bonds. The report also lists the top 10 holdings for each fund. Apple and Microsoft are big players in the Diversified Equity Fund, making up almost 10% of the total assets, while holdings in the Enhanced Fixed Income Fund include SPDR Portfolio, High Yield Bond ETF, and SPDR Bloomberg. Emerging Markets USD Bond ETF making up almost all of the total net assets. The Core Fixed Income Funds are invested in US Treasury notes and bonds, each worth about 3% of the fund. This gives you an idea of the biggest bets each fund is making. For the Core Fixed Income Fund top 10 holdings, we also get the coupon rate and maturity date of the investment. For example, one of the US Treasury notes is 4.0000% coupon rate with a maturity date of January 15, 2027. Moving deeper, we have the actual financial statements, starting with the schedule of investments. This is a big list that details exactly what the fund owns, how many shares, and the market value. If you wanted to see every single stock in the Diversified Equity Fund, this is where you'd find it. The schedule for the Core Fixed Income Fund starts with a breakdown of the different US Treasury obligations, 42.6% of their total. Following this, we have the statements of assets and liabilities, basically a balance sheet for the fund. It tells us what the fund owns assets and what it owes liabilities. Next is the statement of operations, which is like an income statement. Here we see how much money the fund made or lost from its investments and operations. Things like dividend income and expenses are listed here. Next, we have the statement of changes in net assets. Shows how the fund's net assets increased or decreased over the reporting period. This is influenced by both the fund's operations and capital share transactions, like when people buy or sell shares. Lastly, the financial highlights section gives a per share view of the fund's performance over time. It includes key metrics like net investment income, realized and unrealized gains or losses, and expense ratios. This helps you understand how individual shares performed all now. Let's put all this information together. Assessing the overall direction of the Advisor Managed Trust is a bit like reading a weather report. It tells you what's happening right now, but predicting the future is still up in the air. On the one hand, the trust offers a diversified approach across equity and fixed income markets, providing a mix of growth and stability depending on which fund we're talking about. However, the big weakness lies in its reliance on the financial advisor's tactical asset allocation strategy. This means frequent portfolio adjustments, which, as we know, can lead to higher transaction costs and potential tax implications for investors. A notable risk is that the value of the underlying mortgage investments would be highly sensitive to changes in the interest rates, economic downturn and business environment. The value of the mortgage asset may also be impacted in the event any loans default. So is the advisor managed trust a good investment? Well, it depends. The fund's past performance doesn't guarantee future success, so it's important for individuals to consider their own risk tolerance and investment goals, including if an advisor using this fund and its strategy is right for them. Thanks for watching, and if you enjoyed this dive into the corporate decoder, remember to like and subscribe.